Hello, my name is Michael Randolph, and today I'm here with the National Institute for Strategic and Tactical Planning, which partner is the Center for Nonprofit and Community Development. Today's workshop is going to be focused on how to create a professional business plan to which you can use to put together a professional proposal to a bank. So here's some of our mobile offices throughout the United States. They're both mobile and virtual offices in Tampa, Baltimore, New York, and California. In addition to that, we provide training of one kind or another to over 45 different states in the United States. The whole objective and whole focus and goal of this particular workshop is for those individuals that are just getting started and thinking about starting a business, or those individuals that have a business and want to make sure that they're doing everything they're supposed to do in order to get the greatest amount of profit in the least amount of time. So let's move forward with the workshop. Your learning objectives for this workshop is to describe the different, by the end of this workshop, you should be able to describe the different components of a business plan. You should describe why a business plan is important. You should be able to describe what a mission and vision statement is. You should be able to define your market, describe your product and services in detail, describe your organization and management structure, and describe your marketing and sales strategy. Keep in mind the definition of the market is different from your marketing strategy. We'll talk more about that a little later on. And finally, you should be able to understand financial statements. So why is a business plan important? Well, it gives you a blueprint to follow. It is a communication tool for investors, suppliers, employees, and others interested in your business. And each particular communication, be it to investors, suppliers, or employees, etc., should be different. If you don't have a plan, success of your business will likely fail. So, what your business plan should tell others? Well, first of all, it should tell them who you are. And you should be able to tell them who you are in a bold way. Why are you in business? What do you do and how you do it, and how do you do it differently? And what's unique about you? Where do you operate? How will you generate profits? This is very important. Who your customers are. This is important. And why your business is important. The first page of a business plan is the table of contents. And it lists the key components, key sections of the business plan, and other information about your organization. The executive summary. Although the executive summary is the first page of the business plan, it's actually written last, but it is the first page of the business plan. And if an investor, if a lender cannot get past this executive summary, they're not going to read your proposal. So what does it consist of? Your most important sections of the plan. It should be written last. It should provide an enthusiastic snapshot of your company explaining who you are and what you do and why. Should be less than 2 pages. Now, the business descriptions, the first part of the business plan. This describes your business in detail to the potential funder, investor, lender, or any of those forces out there that have money they want to put into your business. You start out by making sure that you search the name of your organization and make sure no one else has it. And then what you want to do, once you identify that, you want to create what's known as a fictitious name. In Florida, you do that with the Department of State in the state of Florida. Every state has this fictitious name that an individual can complete. And it's any name other than your legal name. Let's talk about the different legal structures of a business. The first is a sole proprietorship in general. Now, this is the simplest form of business entity that there is. If you choose this structure, then legally speaking, you and your business are the same. You can continue operating as a sole proprietor as long as you're not the owner of the business. Partnerships, general. A partnership consists of 2 or more persons or co-persons or co-own who co-own a business and share the profits and loss of the business. Each of the co-owners or partners contributes something, usually money, real estate, or something of value. You have to file a partner's certificate with a public office to register your partnership name, and you have to obtain a business license or 2. The income paperwork for a partnership is marginally more complex than a sole proprietorship, not that much different. Corporation. A corporation is an independent legal entity that exists separately from whom, let me repeat that. A corporation is an independent legal entity that exists separately from the people who own it, control it, and manage it. Well, let's talk about some of the features of the corporation. One is that limited liability, meaning that unless you do something really egregious and crazy and criminally, a corporation, when you sue a corporation, you can only sue for the assets of that corporation, and you can't sue the individuals. Remember, when we talk about the sole proprietorship and the partnership, unfortunately, if someone sues you, if you're a sole proprietor or partnership, they can go after your individual assets. A corporation is a little bit different. It's protected by limited personal liability. The limited liability feature of a corporation can be valuable, protecting you from personal liability. For example, debts that you haven't previously guaranteed, including most routine bills, supplies, and small business items. An S corporation. Well, an S corporation, if you decide to do this, it's a business as in C corporation. It lets you have the limited liability of corporate shareholders, but pay income taxes on the same basis as the sole proprietor or the partner. Among other things, this means that as long as you have active participation in the business of an S corporation, business losses can be used as an offset against your other income, reducing or maybe even eliminating the tax burden. The corporation itself doesn't pay taxes, but files an information tax form telling each shareholder a portion of their corporate income. C corporation. Under this type of structure, a C corporation is a separate entity from its shareholders. This means that the corporation pays taxes on any income that's left after business expenses have been paid. Now, a C corporation is different. It reports its profits on a Form 120. The other thing you want to take into consideration when you are a business is to think about your intellectual property. And intellectual property is anything that actually comes out of your mind, that you create from your mind. Now, there's 4 types of, well, more than 4, but I'm going to talk about 4 of the major ones. The first is trade secrets. This protects, for example, your ingredients. If, let's say, for example, you are Popeye, you got chicken seasoning, you want to protect it, the season and the bait, and I mean, the batter and all that from anybody, and it's called a trade secret. The other type is what's known as a patent. A patent is for inventions and discoveries. Copyrights is the last type. Copyrights is the next type. Copyrights protect expressions of ideas and creations. And then finally, you have what's known as trademarks. And trademarks protect phrases, words, and symbols. So the other important process in bringing your business to fruition is making sure you have the necessary permits and licenses. And some of the permits and licenses include zoning, a business tax. Now in Florida, it's called business tax receipt. And this is actually when you, so they can make, it's in other places called sales tax. So business tax receipt is letting the state know how much that you owe them in taxes, if any. You also have your state and professional business licenses, your beverage licenses, if you want to sell alcohol, liquor, your state and professional business licenses, your health permits and license, and licensors retail. What is that? Licenses for retail, if you're doing a retail shop, your establishment licenses, and your environmental regulations. A lot of licenses, a lot of permits. Location can kill you or make you. When doing your location, you need to think about zoning, affordability, the conditions, competition, suppliers, are they going to be able to get to you? Potential employees, is there a labor pool in that area? Safety, is it crime in that neighborhood? And image. Definition of the market. It was just the next component of the business plan. And looking at the definition of the market, because you have to know who it is that you are in competition with and who it is that you sell to. So a definition of market is going to define your business industry and outlooks. People look at outlooks, why is it looking? Is the income constantly going up? in 2, 3, 5 years. Define specific customers' needs that the business will satisfy. It talks about and identify the target customers, and it develops a business profile. So let's talk about target market. And there's some key tools that you can use when you're doing target marketing. This type of marketing right here is more in line with what's known as qualitative research. Also, there are other names that can be used for this type of research. The first type is demographics. Demographics are simply a particular section of the population. You can segment your target market using geographics such as age, location, gender, family, income, etc. The other type is known as psychographics. Well, psychographics are the psycho and cognitive attributes of the customer that reveals their beliefs, values, goals. In making psychographics in marketing, psychographics are used in conjunction with demographics to understand and market to consumer and their purchasing habits. Then you have, and let me just stop for a second, what you don't have here is geographics. And geographics is basically where you identify a location to where you plan to operate. So the final type of tool right here is behavioral targeting. It is a marketing method that uses the web user information to strengthen advertising campaigns. The techniques involve gathering data from a variety of sources about the potential customers' online browsing and shopping behavior. This is a good source to use, behavioral targeting. So let's now talk about marketing and sales strategy. In particular, let's talk about market research. There are two kinds of research, primary and secondary. Primary market research is information you gather yourself. This could include going online and driving around town to identify competitors, interviewing people, surveying people who fit the profile of your target customers, and doing traffic counts at retail locations. It also includes doing focus groups, just getting a feel from people to get that idea if they like your product, so you can test that market. So it's more subjective. The second type of research, and it's more objective, it's called secondary research. And information from resources such as trade organizations, journals, magazines, newspapers, census tract, and demographic profiles. You can find this information online at libraries, from chambers of commerce, and vendors who sell the industry or from government agencies. It's so critical that if you're going to go and you're going to put your business plan, they're going to expect this type of data. And today, because of online, you can get most of this stuff cheap if you know how to go and where to go at to gather this information. Then you need to talk about a description of your product and your services. You need to talk about your company product and services. That is, what do you sell? How is it manufactured and provided? Include details of relationship with supplier, manufacturers, and other partners that are essential to bringing about the service. You should also talk about the problem the product or service solves. Every business needs to solve a problem that is customer face. that customers face. Explain what the problem is and how your product or service will solve it. Also, talk about how you will price your product as well. Organizational management is another key look that businesses look at when they look at you in order to fund you. So your organizational and management, you should have a description of, you should have a description of your company, how your company is organized. You should talk about the legal form of ownership. We talked about that earlier. Is it a LLC? Is it a corporation? Is it a sole proprietor? Any of those type of legal structure. Also need to talk about, we talked about this earlier, all of the licenses and permit that you have. And then you need to give a bio descriptions of any key managers. Talk about your key competitors. This is critical when you're trying to do a deal. This is what funders is going to look at. They're going to know, do you know who your key competitors are? And more importantly, do you have a strategy that allows you to provide your service in a unique way? So also, you have to do that research. You need to know who your competitors are. Do not make a mistake by not doing this. In every business, every competitor. Then you need to talk about your positioning and your niche in the market. So what does that mean? That means now that you've assessed your industry, your product and your services, your customers and your competition, you should have a clear understanding of your business niche. That is your unique segment of the market, as well as your positioning. That is how you want to be presented, how you want your business to be presented to customers. And this could include any of these different ways of getting that out, from online advertisement, cable TV, business website. Social media is becoming an awesome way of putting you into a different type of way. Using social media like Facebook, LinkedIn and those other ones for paid social media can get you the money that you need. Now, understand the difference between Facebook and LinkedIn. LinkedIn is for business to business, and Facebook is pretty much a little bit of everybody. Make sure you're using, if you're business, you're using LinkedIn. That's where the money is. So let's talk about your financial management and what is it that investors look for when they investors, as well as lenders, which is bankers, etc., and other people that's going to put money into your organization. They're going to look at your financials. So let's talk about those financials. You should have an understanding of what a balance sheet is. You should understand what is an income statement. We're going to talk about what those are in general in a little bit. You should be able to talk about a cash flow statement. You should know your cost of goods and your cost of capital. Your cost of capital is the interest that you're paying on that loan in order to start your business. The more your business plan appears to be professional, the less capital you have to pay in terms of trying to secure that loan. Keep in mind that lenders and investors are different. Now, the interest rate for lenders are cheaper than the interest rate for investors. That's because investors are willing to take more of a chance. Whereas the bankers are somewhat conservative, they said, we want to know that our business sounds reasonable. An investor might, especially if you got something new to the market, an investor will be the type of person that you would want to go to. Investors are focused on the return on their investment. Here's some other things that the investor will look at. They want you to know your numbers. We're going to talk about that in a little while. Know your customers. Remember we talked about the different ways, geographic, psychographic, behavioral, and demographic. In order to understand your customers. But the last thing I want you to know is to know your vision for the future. You should be able to articulate to them that here's how we're going to look in the next 5 years. Here's how we're going to increase our bottom line profits in the next 5 years. You might say over the next 5 years, 10, 15% increase in profit per year, etc. This is very important if you do not remember anything else. If you have anything over a 5% attrition rate, the bank will not, or the lender will not, and sometimes the investor will not fund you. What that means is that you have to have loyal customers, and you can't be losing them. Because let's say, for example, if you got 100 loyal customers when you started the business, but every year it's reduced by 5% or 10%, that's a no-no. Here's a rule of thumb. A 5% improvement in nutrition will result in a 25 to 85% increase in your profits. Let's talk about a balance sheet. This is one of 3 type of financial instruments that we're going to talk about. A balance sheet is assets minus liability equals net worth. Assets is anything of value. It can be money, it can be a building that you own, it's anything that you can convert into cash. That's also an asset as well. Minus liability, pretty much whatever you owe, and that gives you net worth. It measures your business value. We're talking about valuation. That's important also. You need to know the value of your business if you're going to sell it. And it only gives a snapshot in time. For example, for this year. The next type of document or next type of instrument is the income statement. The income statement is revenue minus expense equals profit slash loss. Revenue can be instant cash, or revenue can be what's known as cash receivable. Cash receivable means the amount of money that's owed to you in the future. Let's say you did a job for a person and you say, hey, you have 30 days to pay me. Now, your income statement measures how a business has performed over a specific period of time. And finally, cash flow. Well, cash flow looks at your monthly statement of cash on hand, income and cash, and expenses. It's very important because you're going to use this to determine project working and those that are not working. That is, you're going to use this to determine project working capital, availability, and shortages. I really messed that up, so let me try again. Use this to determine projected working capital and availability and shortages. When you're looking at costs, there's 2 ways you can look at costs. One is what we call cost plus. That's the cost of obtaining your product or providing your service, plus enough to make a profit. A value-based type of cost is based on your competitive edge and brand and perceived value, like Gucci. Now, let's look at some of the things you want to look at on the financial side of the table. You should understand you're going to need a startup expense and capitalization. What is capitalization? Capitalization is when you buy like a computer. And this is for accountants. This is where they, do things. They call it capitalization. And you buy that computer, it's $300. Instead of charging that as an expense, as soon as you bought it, you're going to charge that as an expense over, let's say, a 12-month period or a 24-month period, or for the life of that particular product, you're going to have it depreciate. So that's what capitalization is. You should have a startup expenses, and you should have an open day balance account. If you're using a business plan to seek finances, include your personal financial statement for each owner and each major stockholder. Sometimes you don't have this. That's why you need to have a selling winnable deal. I call it bankable deal. So you should look at doing 12-month profit and loss projection or 3 years, cash flow projections, optional 3-year cash flow, projected balance, break-even calculation, use of capital. Again, this goes back to the fact that if you're using a business plan, seeking finances from vendors and investors, provide a breakdown of how the capital and what the result will be expected. Now, it's very critical that you understand there are 3 things that an investor is going to look at. Let's talk about those 3 things that every investor wants to know. You should know when you come to see them. You should know your numbers. You should know your customers. And you should know a vision of the future. These are the 3 key things that you need to know when you're going to see an investor or a lender. Now, let's talk about your operational plan. You got the plan together now. Now you're ready to open up the door. And now you're going to break down everything related to your operational plan. In your operational plan, you want to explain the daily operation of your business, including the location, equipment, personnel, and process. You want to talk about production, quality control, location, the size of your location, etc., zoning, all those things should be part of your operation. You should talk about the legal environment, any licenses that you need, any insurance cover, any environmental health or workplace regulation, personnel. You need to talk about what type of employees are you looking for. You need to talk about how many employees do you need? What is the pay structure? Is hourly structure, is salary, is a commission, etc. You need to talk about what type of training you need and how you will employ it. So you need all of these things. The other thing in your operational plan, you should be able to talk about your inventory, your supplies, your suppliers. You also should be talking about what is your credit policy. Can people do returns, and what's your return policy? Your appendix should include your company brochure, resumes, list of business equipment, copies of press article, press pictures of your business location, and key business agreements such as lease and contracts. 9 out of 10 businesses fail within the 3 years, first 3 years. That might or might not be true, but without a good business plan, you're more subjected to fail. So I hope this workshop has been a benefit and informative and give you an opportunity to know where your weaknesses are and where your strengths are. We also provide an in-depth class for those that want to actually learn how to write a business plan as a business, as a consultant. We also do business plans for those individuals that want a really sellable business plan. We put that together as well. You can get in contact with us on YouTube at www.youtube.com/c/Michael Randolph. That's YouTube at www.youtube.com/c as in Kenya, small c/Michael Randolph. You can also get in contact with me, connect with me on Facebook, on LinkedIn, on any of those sites. Be sure to email me at Center for Nonprofit and Community at gmail.com. Again, that's the Center for Nonprofit and Community at gmail.com. Center for Nonprofit and Community at gmail.com. Thank you again for taking this workshop. We're looking forward to hearing some feedback from you. To date, we've worked with over 350 for-profits and nonprofits that started. Our motto is based on these following concepts. We take you from concept, your idea, to design, to development, to operation, to growth. A lot of companies will work with you to get your business started, but not to grow it. So we work with you not only to start that business, but also to grow that business as well. Again, email me at Center for Nonprofit and Community at gmail.com. And it was a pleasure. And join us. We provide all types of professional workshops, from how to do a grant, to how to do a nonprofit development, how to do a strategic plan, how to do an operational plan. We do all types of professional training. Thank you. Hopefully we can connect and do some business. If not, I hope this has been an informative and impactful